Monday, February 25th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the dollar index and why I think it will make its next secular top in 2033. And it might sound a long time from now, but I'll show you why. And I also want to talk about why the dollar index is not that important. That the most important thing for you to maintain the purchasing power of your savings is to hold physical gold and silver. And by that I don't mean investing in stocks, of course, because as we know, gold is money and everything else is credit, as JP Morgan said. I know Warren Buffett says gold hasn't been a great store of value, but I think it has. In terms of money, it has been the best money. Stock market is a different game. It's more speculation. Money is saving. So, and I want to talk about why the dollar index, of course, doesn't really matter. I think it's a distraction for people in every country, be it your currency, the euro, the Japanese yen, the pound, the Canadian dollar, the Swedish krona, or the Swiss franc, which is, of course, all the components of the dollar index. And I'll talk about that. Before, of course, I go into the dollar index and the future, my future forecast for it, and a look at how gold and the dollar index have traded. I will look into what the markets are doing this morning. It's just before 7:30 a.m. London. So let's have a look here. Spot gold, 13.29.30. It's up at about $1.30. The low has been 13.26.70, and the high 13.32.29. So we're pretty much, I would say, in the middle of the range. Silver knocking on the $16 door here. It's at $15.98 right now, up 6 cents. The high has been $16.01.50. The low 15.85. The Dow future is up 75, almost 1/3%, 26,098. S&P 500 up 7.5 points, 1/4%, 2798. The Nasdaq 100 future 7109, up 21 or 1/3%. The fiat currencies this morning, sterling is at 130.63, up 8 pips, so virtually unchanged. Euro is a little stronger, it's up 0.2%, 113.52. Dollar yen is unchanged, so 110.66. Dollar yuan, breaking through 6.7 here, 6.70. We're at 669.50. It has been as low as 667.30. So we continue to see the dollar drop against the yuan as we approach the deadline, March 1st, for a trade deal. But it looks like they're not getting a deal, and it's going to be carried on, the negotiations. So much for deadlines. Crude oil, virtually unchanged. WTI, yeah, unchanged, 57.27. Brent as well, 67.06. Bond markets, the 10-year yield is up 1.5 basis points at 267. The 1 year is 254. The 5 is 249. So 5 basis points inversion still there for the moment. So the dollar index and the dollar in general. I mean, a lot of people look at the dollar index as a measure of dollar strength or weakness. And there's a lot of hours and debate about the dollar, how it's going to do, how it's going to impact gold. And I am aware that it does in the short term. I've been following gold for, since roughly 2002. And I do know that the dollar does influence the gold price. But in the long term, I want to show you how it doesn't really matter. But before that, I want to talk about how I think the next stop in the dollar, secular top in the dollar index, is going to be in 2033. Why 2033? Well, I've just done some looking back at history and the cycles of the dollar index, and it looks like there's a pattern here. So I've just used the pattern to make that forecast. Of course, I could be completely wrong, but it doesn't. It looks like highly probable, in my opinion. So if we look at the dollar index, by the way, was started, I think, here. When was it? 1973. Yeah, it says history. U.S. dollar index started in March 1973, soon after the dismantling of the Bretton Woods system. At its start, the value of the U.S. dollar index was 100. It has since traded as high as 164.72 in February 1985 and as low as 70.698 on March 16th, 2008. But if you look at the chart, it on a bar chart, for example, it goes back as far as 1968. So even though it only started in 1973, they can calculate it back to that just using the currencies that are in the component. So you can see here that in 1969, there's a top at 122.34 on the dollar. And then there's a low in 1978. So that's about 9 years, 82.07. And then we have a top in 1985, that top 164.72. There's a top in 2001 at 121.02. There's that bottom in 2008. We're talking, that's the all-time low, 70.698. The low, of course, in 1992. I forgot there. 78.19. And then we have a high in the first quarter of 2017 at 103.82. And if you look at all the major highs here, 69, you add 16 years to that, you get 85, right? 1985, you add 16 years to that, you get 2001. You add 16 years to 2001, you get 2017. So unless we break back above 103.82, I think the next stop in the dollar index, major secular top, will be in 2033. 2017 plus 16. It's all math. What about the next low? Well, historically, it takes anywhere between 7 to 9 years. So if we add, let's say, 8 years to 2017, we reach around 2024, 25, or thereabouts. So that's my view of the dollar index. Yes, it has been rising. The last, this is a quarterly chart for the last 18 months. It has risen quite a bit. But nowhere, it's not that strong a rise if you look at it in the scheme of things. And now I want to show you gold and why I think it's not. It's a distraction. To keep looking at the dollar and see how well it's doing, and even using it as a store, a trading or investment strategy for safeguarding monetary savings. That's why I always recommend people to do dollar cost averaging of physical gold and silver if they can. So the dollar index since 1969 has gone down about 20%, from 122 to 96.48. But gold, if you look at gold, it's gone from 35 all the way to around 1330. So that's 3,700%. So if you'd thought in 1969, well, I'm going to get out of the dollar, I'm going to get into the European currencies, the yen, the Swiss franc. Yeah, you would have done okay, but you would have missed a lot of appreciation. As you can see, gold has gone from 35 to 1330, and even in the interim, it's gone to almost up to 2,000. And the other point I want to make is that, yes, since 2011, gold hasn't done well because it topped at 1900, but the last major low in the dollar index, that was in March 2008, when the dollar index touched 70.69. The high in gold at that time was 1,031. The dollar index has gone up 36% from the low in 2008 at 70.698 to 96.50, 36%. That's a good move. But gold as well has gone from roughly 1,000 to 1,330 right now. So that's up 33%. But so it's matched the dollar even through that time. And in between, it even went up to almost 2,000 while the dollar was rising. So that's what I'm trying to say here. Yes, follow the dollar index. In the short term, it is important for gold and silver moves if you're trading gold and silver. But I have personally traded gold and silver in the past many years ago, but now I just use gold and silver as a form of saving. Don't recommend people trade gold and silver, but if they do, that's their prerogative. So yeah, the dollar index is an instrument to help you do that. But over the long term, as you can see, it has very little relationship. Dollar index is pretty much, has moved, of course, over the years a lot. But gold has just been an upward trend, and it's made 3,700%, from $35 an ounce to $13.30. The dollar index has dropped about 20%. So, yeah, and I think the dollar will continue to drop against those major currencies in the dollar index over the next few years. Does that mean you should move to the euro, to the Japanese yen, or Aussie dollar, Swiss franc? No. You should move to precious metals. It doesn't make any sense if you look historically to stay in the paper currencies. So that's what I wanted to talk about. Dollar index, yes, it's important, but major distraction in my opinion. We need to keep a hold of the currency of kings, gold, the currency of gentlemen, silver, and I also heard another one, aside from the currency of slaves being paper, barter is the currency of farmers or something like that, or peasants. So that's a good one too. I don't think there's anything wrong with barter because you're actually trading value for value. You just need to find people that, the exchange isn't as easy because you need to find someone that wants what you have and that person has what you want as well. But it's much better, I think, than fiat barter because it's value for value. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet and you think you like the channel, please subscribe. Make sure you also hit the little bell, notification bell, so you're notified of all my new videos. You can also follow me on Twitter, DTube, and Steemit. Have a great start of the week. Take care. Bye.